1996. The World Bank and Eswatini government today launched the Eswatini Public Finance Review. This is the first public finance review since 1996. This report examines and analyzes options to improve the efficiency and effectiveness of public expenditure and revenue mobilization in support of sustainable and inclusive economic growth. Economist Sanele Sibiya will join us today for his takeaway on the report. The report reveals that Eswatini's economy has expanded at an average rate of 2.8% since the year 2010, which is below the average of 4.5% for lower middle income countries. The public debt stock has grown rapidly, domestic areas are mounting, and lending to the government is crowding out private sector activity. We will have discussions with Mr. Sibiya on this in a few minutes. Then later we speak to Sibusiso Gule, who is the manager retail services at Nedbank Eswatini. He tells us about Nedbank's franchise financing, what it is and who qualifies. And on our last segment today, we will take a look at today's financial markets. Do stay with us. For now, let's go straight to our first story.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back, and for our first story, government is committed to permanently resolving the issue of government expenditure areas. This is evident in that Cabinet is taking decisive steps, including the adoption of annual audits and the gradual transition to an accrual-based accounting system in line with international public sector accounting standards. This has been said by the Minister for Finance, Honorable Neil Rackenberg, during the launch of the Eswatini Public Finance Review report by the World Bank, which gives recommendations for Eswatini's fiscal sustainability and economic stability.
The review has four main messages that we want to leave with you. The first message is that addressing current macro fiscal imbalances is essential to promote investment and economic growth and enhance resilience of Eswatini's economy to economic shocks. Macroeconomic stability is the foundation for sustained and continued economic growth. Without it, growth simply will not come. And fiscal policy is the critical tool to ensure that stability. And this is in particular the case in Eswatini, where there is no fully independent monetary policy. So this is the key policy lever that the authorities have available. So hence, ensuring continued macroeconomic stability needs to be a core goal of fiscal policy. In this context, the review shows that it would be important to contain expansionary spending and eliminate expenditure areas. The second message of the report that we would like to leave with you is that domestic revenues could be increased while also strengthening competition. These are not either-or options. These dual objectives, revenue raising and stronger competition, could be achieved by rationalizing the vast array of tax holidays, tax expenditures, and procurement preferences that exist today. All these things are limiting competition and reducing revenues. Rationalizing them would level the playing field for everybody, and thus promote competition. And such rationalization would also raise tax revenues without any increase in tax rates that are already high. In parallel, there's a room to enhance tax administration to reduce tax evasion and improve compliance. The third message. So the third message we want to leave with you is that strengthening public financial and investment management would improve the impact of government spending. Then the fourth and final message is that addressing inefficiencies in public health spending and health spending management would improve health outcomes. It would improve life expectancy, infant mortality, and stunting. And it would do that without requiring increase in health expenditures.
The Minister for Finance, Honorable Noel Rickenberg, says Eswatini is already in line with some of the recommendations from the World Bank's report.
I'm pleased to report that we incorporated some of its recommendations in the budget speech. This demonstrates the value of this review and the strong collaboration that made it possible. I must commend the World Bank and our dedicated team for working together to deliver the first public finance review on Eswatini by the bank since 1996. Congratulations on the significant milestone. This report provides valuable insights into fiscal policy opportunities, which are crucial for Eswatini's development and for addressing constraints to economic growth. For instance, we recognize the importance of stabilizing revenue streams while promoting competition and market contestability. That is why, in my speech, I propose new revenue measures, many of which align with the recommendations of this report and take into consideration the ongoing challenges stemming from the pandemic and global economic shocks. One of our key priorities at the Ministry of Finance has been to strengthen public financial management, what we refer to as PFM. To this end, we have been implementing the Integrated Financial Management Information System, what we refer to as IFMIS, to improve budgeting processes and addressing long-standing PFM challenges. Additionally, we committed to permanently resolving the issue of government expenditure arrears. Cabinet has taken decisive steps, including the adoption of annual audits and the gradual transition to an accrual-based accounting system in line with the International Public Service Accounting Standards, what we refer to as IPSAS.
The Minister for Finance, Honorable Noel Rickenberg, says the review of the Public Procurement Act of 2011 will help in modernizing the procurement process, stating that this is in line with the recommendations of the report from the World Bank. For Nedbank Business Watch, Nelson Dlangamandla, Fuminkosi Nzinisa, Mbabane.
Civil servants are paid higher than private sector employees, and this reflects in the government's expenditure. This was an observation made by Marco Kwaramba, who's the senior country economist of the World Bank. The World Bank economist shared this during the launch of the Eswatini Public Finance Review report at Hilton Garden Inn. This has drawn a reaction from Business Eswatini, especially because companies under this organization contribute about 92% of the private sector gross domestic product.
There is need to address structural challenges to boost growth. But the point here is on the gap, on the wage gap between the public and the private sector. So in Eswatini, the gap is too large, and we know what it does. The gap is too large in such a sense that the civil servants are being paid more than the private sector. Average payment or average wage for the civil servants is 2.5 higher than on the private sector. If you want to talk about percentage, the gap is 61%. The wage premium is actually 61% higher in the public sector than in the private sector.
Business Eswatini's Chief Executive Officer Inathi Dlamini has promised to work with government and stakeholders involved to ensure that the recommendations of the report are implemented.
You will notice that some things that we didn't even know, that the civil service is actually now, on aggregate paid higher than the private sector. These are findings which we will be litigating inside. I find them very, very, very odd, but we will see. And I am coming from the point of view of the private sector being, and I will say it out loud, the genesis of national wealth in this country, from which all taxes, including the circle receipts, they emanate, to see what role we are playing.
The governor of the Central Bank of Eswatini, Dr. Phil Mnisi, has recommended the World Bank for the recommendations, especially those that touch on monetary policy reforms.
The report is highlighting the issue of arrears. Arrears are very important because if they are not addressed, they create a structural issue. So government has to borrow money to deal with outstanding payments instead of borrowing that money to invest in capital formation. So that is not good, and I'm happy that the report is addressing that problem, and also the commitment by the minister to attend to the arrears, because when the arrears are also not addressed, it goes got a negative effect on our reserves, and the report is also highlighting that.
The World Bank has promised to work with Eswatini as the recommendations are being implemented to ensure economic sustainability. For Nedbank Business Watch, Nelson Dlangamandla, Vuminkosi Nzinisa Mbabane.
That's it for our business news. It's 12 minutes after 2. Stay with us, don't go anywhere. We come back with Mr. Sibusiso Gule, who's the manager retail services, after the break. All right, so welcome back. It's Nedbank Business Watch. Thank you for staying with us. Today we're joined by Manager Retail Services from Nedbank, Sibusiso Gule. We're discussing Nedbank franchise financing. This is a particular for people that have an interest in franchising business. A very good afternoon and welcome to the program. Thank you for joining us. What is Nedbank franchise financing, Mr. Gule?
I think maybe just to greet all the viewers out there, our customers and potential customers into this session. Nedbank has been in the franchise space for quite a long time, actually. You're speaking to so many years of a craft that we have all sharpened over the years up to this point now, when we have a very solid package for our customers in terms of franchise financing. So with franchise financing, we are basically looking at financing businesses that are franchised, in terms of you having to use a name that is patented by another corporate company, based whether in Swaziland or internationally or in South Africa, wherever it is, but they've given you the rights to be able to use that name to run your business here. Obviously, it comes with certain terms and conditions, obviously, because you use their name, so they're very careful to ensure that you do not actually miss out on certain things. So there are those standards that you have to follow. So we are saying as a bank is that it is one area, it is, because it is still a niche market, to be honest with you, but it is, and for us, it is one area that we really, really are enjoying to play in. It's a space that we are enjoying to play in. And we have seen quite significant growth over the years. But Nedbank franchise is the way to go.
Yeah, I think the most important question is who gets to qualify to get financing from Nedbank. I mean, we have first-time business owners that want to try franchise. We have those that want to revamp. We have others that want to add more stores. Who qualifies to get financing?
To a certain extent, you've already responded to my questions, but to your question. But the first thing that you have to ask yourself is, who is the person that is applying for that services, you know? So you want to have a situation where you understand that even before doing anything, you know. You talked about revamp startups, because for startups we can do that, because what we have in terms of stats, what we know, and it is there in every research that has been done over the years, is that at least 90% of franchise businesses, they do succeed. So who doesn't want to play in that space? So even if you come and you are new in that space, we want to look into that business. And one of the main things is the fact that the owner of the name, the owner of the patent name, will want to train you until you are quite conversant on that, on the way of the operation of the company. So just to make sure that their name is not dragged down, you know, by your poor performance. So we like that we are not only supporting you, but also there is a mother behind that will be actually cracking the whip on you as well to say, look, these are our standards. Please try to make sure that you don't deviate from our standards. So for us, we are comfortable in that sense, because then there is guidance into the whole thing, and which is why most franchises, again, are successful.
Right. So is it not risky for the bank to finance someone who's a startup, first-time business owner that wants to open up a franchise? What do you look into with that person? Because it's quite different compared to this one that has many shops already.
To tell you the truth, risk is in every situation that we may find ourselves in. Risk is in someone who is already there running a franchise. Risk is already on someone that has been running a franchise for the past 20 years. It is still risk, but the risks are different, you know. But now, with Nedbank franchising, we have got this basket that we have, which has got two items in it that which we are reliant on. The first one is the franchise credit policy, and the second one is the customer value proposition on franchising. Now, they go hand in hand. Obviously, the customer value proposition will actually speak to who do we want in terms of our appetite. Is it a franchise name that we are comfortable with? Is it a franchise name that that is well known? And to what extent we can actually finance that? And the person behind it as well is very key. We call them a jockey, you know. Okay. Because now, in the literal sense, you're talking about a jockey, someone riding a horse. So obviously your business is your horse. So that is why we kind of call you a jockey in that space. Okay. So now we are saying, who are you? Then we'll be able to combine all these ethics and key pointers that will actually help us to come out with the right decision to make, you know, based on our franchise credit policy and our customer value proposition on franchising.
So I suppose you do the track record, the track record of that customer that wants financing, and also what else do you consider? Do you consider things such as research? Because I suppose they should have done their research before coming to you. Research about that business or store or retail, and also permission, which is very important, permission from the store owner. Do you look into things like that? What documents are required for that particular person to bring with when coming to a net bank?
I think even before we get to a point where we are asking what documents should somebody bring, we have to admit that the pre-qualifications of an individual who has come to apply for financing, especially for franchise financing, it must be somebody. In fact, this also applies to even in general, somebody who wants to do something. But what we are saying is the person that wants to apply for franchise financing must have done their own homework. You know, the bank will not actually do what they're supposed to do in terms of, trying to do a bit of due diligence for themselves. They have to do it for themselves. Then we've got our own due diligence that we have to do on ourselves, within ourselves, to say, is it something that is we can take it further in terms of application and what have you, or it's a non-starter, because sometimes you find that the proposals are presented but they are not actually ticking all the boxes. Nevertheless, we can finance literally almost everybody. New, you want to do a revamp, you want to do additional stores, whichever situation that you want to, you find yourself in, we are in there on the sideline to try and finance that. But the two items that are guiding us, the credit policy, the franchise credit policy, and the CVP, which is the customer value proposition and franchising, are very key in seeing us succeed, because we are saying we don't finance franchising like everybody else. We've got our own special way. I'm not going to reveal a lot of that special way here because we're on air, because we don't know who's listening. At the end of the day, we've got a much better sequence and a much better way of financing franchising in the country. That is why we are always referred as a franchise bank, because we probably bank most of the franchising in the country. So it talks to anybody that is listening to say, maybe they need to run to Netbank.
Yeah, definitely. All right, so do you do 100% financing, or is there a certain percentage that that particular customer should bring to the table?
Yeah, it will depend on so many things there. When we discussed earlier on, I said we also look at the jockey on who you are and all those things. So when I say who you are, we're not talking about behavior. We're not talking, maybe a little bit of behavior. We're not also talking about whether you are an Asian or a European. No. Who you are in terms of your financial strength, yourself, your experiences, that you have, So the issue of contributions and all that, whether we finance it 100%, it depends on that. Other than who you are, have you been in the franchise space? What are you currently doing? And what you are doing, is it doing well? And all those things. So they just come into the frame, and we will be able then to make a decision on that. But we do grow a lot of, franchisees who are already in the game and they want to grow. We can actually give them up to 100%, And you talk about 100%, it's possible in so many other ways, depending on the strength of that transaction. Then if we are comfortable in terms of maybe cash flows and all those stuff, that is needed information that would have been submitted, will actually speak to that.
Okay.
Yeah.
Okay, so how long do I have to be with the net bank in order to qualify for the franchise financing, or I can just decide tomorrow that no, I want to go with Nedbank and apply for the franchise financing?
The good thing is, when you talk about franchise, we are saying, as we have said before, 90% of franchises succeed, whether you are in Swaziland or you are in South Africa. In fact, even in the US. And it is stats that is very critical for us. So when you have an idea of which franchise you want, you just can't come and approach Nedbank, whether you bank with Nedbank or you don't bank with Nedbank. But for us, it's all about looking at the proposition that we would have presented and find that element of us being interested in. So we are always trying to find a way to make the deal. That's what I can say. Whether you are new or you are not new, we're always trying to find a way to actually have a deal on that, because we know that it has got a 90% chance of success.
Okay.
Yeah.
So does Nedbank offer advice on how to go about accessing information, maybe on that particular store, or you just want to get the documents required from that customer and just process the application?
We can give advice in so many ways, but you must have made up your mind to say, which kind of franchise do you want to do, when you come to us? Then we can actually then guide you on that, on how best you can actually approach that. But obviously, a lot of the work, you have to do it
Yourself.
We can only guide you to say, go to this, go do this, like this, speak to this one, and other things that may actually help you to actually get to a point where you are able to put together your business plan, because your business plan will also tell us that you have actually reasoned this thing through, and you know what you're talking about, and you have spoken to name the name or the franchise that you so want to do.
Okay, just lastly, Mr. Gwile, before I let you go, for more details, or if they want to apply for the franchise financing, who do they contact at Nedbank, or they go to one of the branches? Who do they contact?
Yeah. They can, we've got the number. My number is there, that can be available to everybody that wants to start a franchise. I don't know if I'm going to share it now or share it at a later stage.
You can share it now.
Yeah.
Okay.
So my number is 76028136. They can call me directly. Okay. Or for any further information, they can just visit any of our branches. They can actually get a bit of the information, and they can always be referred to me so that we are able to find a way to help that client.
All right. Thank you so much, Mr.
Thank you
Gwile.
very much.
That was Manager Retail Services at Nedbank Sibusiso Gwile. And if you're interested and want to find out more on Nedbank's franchise financing, do not hesitate to contact him on his number. Thank you for staying with us. We'll take a break. We'll be back shortly. Welcome back. Thank you for staying with us. This is Nedbank Business Watch. We continue with our program. The Ministry of Economic Planning, in an effort to ensure Eswatini's economy continues to be on a sustainable path in line with the recommendations of the World Bank's Public Review Report, the Ministry of Economic Planning is enhancing the public investment guideline prospects to incorporate issues of climate change. This has been said by the Minister for Economic Planning, Dr. Tambogina, at the launch of the report at Hilton Garden Inn in Babane.
I am delighted to be here today as we launch the Public Financial Review, a milestone in strengthening our economic and social management. This is the first public expenditure review done by the World Bank for Eswatini since 1996, and it provides us with a critical opportunity to assess our policies, challenges, and opportunities. I wish to extend my sincere appreciation to the World Bank team and our government counterparts for their dedication and collaboration in producing this important report. Their work will help guide our efforts in ensuring sustainable public finance management. As a government, we highly value our partnership with the World Bank, not just on this review, but also in supporting various lending projects that drive economic growth. A notable example is the World Bank's recognition of Eswatini's unique characteristics, leading to our reclassification as a planned country, with access to both IBRD and IDA financing. IDA financing is much more concessional. This marks a significant step forward, as it now enables us to access additional and more affordable funding for our national development priorities. The Public Finance Review provides us with an opportunity to reflect on our policies, challenges, and opportunities in managing public finances. As a government, we are particularly committed to strengthening public investment management to ensure that our resources are used efficiently and effectively. My ministry has been leading the efforts to enhance public investment management, and I am pleased to share that we have recently revamped our public investment management guidelines, which now also incorporate climate considerations. The guidelines aim to continually improve the methodology and to prepare and assess public investment projects through all aspects and stages of the project cycle, from long-term planning through project identification and preparation, the quality and control procedures, implementation, monitoring, and the evaluation of the results. This is a crucial step in ensuring that our investments contribute to long-term resilience and sustainability while maximizing their impact on economic growth and development. As government, we welcome the Public Finance Review and recognize the importance of its findings and recommendations. Our commitment is to work towards implementing the necessary policy actions that will strengthen fiscal sustainability and promote private sector growth. By ensuring efficient public investment, enhancing fiscal discipline, and integrating climate resilience into our economic planning, we can create an environment that fosters sustainable growth, job creation, and prosperity for all. Ladies and gentlemen, my plea, therefore, is that we all use the insights from this review to drive forward meaningful reforms and shape a better economic future for all Eswatini. I look forward to continued collaboration with our partners as we work together to achieve economic stability and development for our people.
The Ministry of Health has committed to ensuring that investment in healthcare yields the desired outcome, which will lead to a healthy nation with an increased life expectancy. This was said by the Minister of Health, Mduduzi Matsebula, who was represented by the Minister of Housing and Urban Development, Apollo Mapalala, during the launch of the Eswatini Public Finance Review report by the World Bank.
Today's public financial review tells a story of both progress and pressing challenges in our healthcare system. Whilst we celebrate the dedication of our healthcare workers who have helped extend life expectancy, we must confront an uncomfortable truth, and that is too many of our people still lack access to quality healthcare. Our nation invests significantly in healthcare, more per capita than many of our regional peers. We have also made significant gains in improving the overall health of Eswatini, especially in HIV/AIDS. Yet this investment has not translated into the health outcomes our people deserve. When every lilangeni we spend comes from the hard work of our citizens, we cannot accept that our maternal mortality rates remain among the highest in the region. When a mother in the whole region has a 95% chance of giving birth in a health facility, while her sister in the Lubombo region has less than 90% chance, we are failing in our promise of equal care. These numbers represent real lives, real families, real futures. When a clinic runs out of essential medicines, we are not just facing supply chain issues, we are putting lives at risk. We must ask ourselves, why are we not seeing better returns on our healthcare investment? We are grateful that our partnership with the World Bank contributes both technical expertise and financial support that complement the government's effort to address performance gaps. Continuing down this journey of reforming Eswatini's health system so that it is more responsive, efficient, and equitable demands our unwavering commitment and decisive action. Fellow Eswatini, the Public Financial Review provides clear and actionable recommendations on the way forward. We must transform our public financial management system to enhance efficiency and ensure every lilangeni delivers maximum health impact. We must build an integrated, responsive supply chain system that ensures availability and quality of essential medicines and other supplies. We must strengthen primary health care as a foundation for progressing to universal health coverage. As I conclude, our administration's mandate demands bold action, and we must deliver. Let us move forward with urgency in this mission. Together, we will build not just a healthcare system, but a healthier, more equitable Eswatini where every citizen can access the care they deserve.
And those are speeches from the Minister of Economic Planning and the representative of the Minister of Health, Minister Apollo Mapalala. After the break, we're joined by Sanela Spia. Stay with us. Welcome back. Thank you for staying with us. You're still tuned into Nedbank Business Watch. We get into our next segment, making fiscal policy an instrument for macroeconomic stability and external competitiveness, increasing domestic revenue while enhancing competition and market stability are some of the recommendations of the Eswatini Public Finance Review report by the World Bank. And as economist Sanele Lesbia joins us to unpack this report further, giving us an understanding on how attainable are these recommendations of the report. A very good afternoon, Sanele. Thank you for joining us this afternoon. What is your key takeaway on the report? What has contributed to the public deficit, debt levels, and expenditure areas? What is the status of our economy?
Thank you, Lungelele, and good afternoon to the viewers. So what we're seeing today is, the presentation and the launch of a public finance PMR report, the Public Finance Management Report. So we've not seen one ever since 1996 as a country. So what it highlights basically is the fact that, as a country, Eswatini is doing relatively well across comparing with comparator countries. But there are those issues that we need to manage, issues such as the ballooning wage bill, issues such as the over-reliance on the Southern African Customs Union, revenue adoption, revenue reliance, and, other issues that are coming to play is the issue of the gap between the potential tax revenue that we could be gathering domestically and what actually gets collected. So we're seeing those divergences. So that means there should be some investment into tax regulations and tax compliance, ensuring that we are collecting what we should be collecting as a country. One of the interesting findings coming out of the report, Lungelele, is the fact that Eswatini does not necessarily have to increase on taxes, but what Eswatini needs to do is to ensure compliance and lower the cost of tax regulation and compliance. That way we would be making the taxmen's efforts a bit more sustainable and a bit more efficient, and we would be able to gather that money as a country that we need. Then another key takeaway from this report is the issue around, the issue to do with efficiencies within the public sector, more especially under procurement, in as far as dealing with the problems that we face in the health sector. So that is one of the issues that has been highlighted, and it does present tenable and attainable recommendations on how we can solve that crisis. So it's an issue of the country taking that report and running with it, and we might find some areas of improvement.
Yeah, Mr. Spear, exports are heavily concentrated and trade integration is limited. Eswatini is a signatory to several trade agreements, but its private sector has been unable to take full advantage of trading opportunities. How do we overcome this challenge?
So when you are talking of the issues to do with trade, Lungelele, is one has to understand that there has to be what we call a critical enabler to ensure that one can undertake and take advantage of such. So what we need to deal with as a country is firstly deal with the structural bottlenecks that we face as a country. We need to lower the cost of doing business, and we need to get our private sector to a level where it's competitive. And access to finance is one of those bottlenecks that we need to first overcome. And then also we need government to start settling areas on time, because most of the businesses in Eswatini, they are particularly focused on servicing the public sector. So we do need to ensure that those areas are cleared on time to actually free up money for for these investments into the trade opportunities, and we also do need to diversify our markets as a country.
Yeah. I think some of the recommendations that were revealed by the report are increasing domestic revenue while enhancing competition and market constability. Are some of the recommendations of the report. How attainable are these recommendations?
So what we are seeing is what this report proposes is nothing new, Lungelele. But what we need is the political will to implement those. We do need to increase on tax, on the tax revenue base and improve on market contestability. But one of the bottlenecks there on market contestability is the issue that we have what one would call your infant industries. So it becomes a tad bit difficult then for the country to say we want to improve on competition when you're promoting those industries. But if we can have a way of improving contestability through insular means where we're looking internally for that growth, I think that could work. And once we get more companies running, then we could increase that revenue base. But in terms of attainability, yes, it's attainable if we are also looking at improving the regulatory framework to ensure that we are able to allow for private players to play relatively well in the market. And another issue that would have to then happen is we need to lower the size of the state in business, the size of the public sector. So our government currently drives growth. What we need is we need to grow the private sector to a level where it is vibrant enough to then be able to substitute the public sector, either in size and also in terms of the lucrativeness, where we can have people leaving the public sector to go and work in the private sector, because once it's vibrant, it should then offer that competitive wage, wage above what the government pays to people. So those are the issues that we need to do, Lungelele. What it needs is that concerted efforts to make sure that we are able to attain these as a country, but critical to this is the growth of the private sector. We cannot attain any of these. Maybe we can attain efficiency within government without the growth of the private sector, but we do need the private sector to grow if we are to reduce the size of the state in business, and we do need to work on those efficiencies and deal with the inefficiencies within government so that we are able to realize value for money in terms of our government expenditures, for example, where we don't necessarily see these cost overruns and these cost underruns, but relatively attainable.
Mr. Sibiya, for your overview of the report. That was in-house economist Eswatini Sibiya, just giving us an insight of his insight of the report that was launched by the Eswatini government and the Ministry of Economic Planning. Let's go for an ad break. We are back with Toba on today's financial markets.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit sex. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Thank you for staying with us. This is our last segment of today's episode of Nedbank Business Watch. Thank you for staying with us. We're now joined by Toba from Nedbank Eswatini for today's market analysis. Thank you for joining us, Toba. Very good afternoon. Welcome back.
Thank you, Lulu. Good afternoon to you and your viewers.
All right. Let's take a look at markets today. We've just received news that the SA budget speech has been postponed. What happened?
Correct. So we've just received news that the budget speech in South Africa has been postponed. Speaking to the media, the Secretary General, Fikile Mbalula, mentioned that the ANC couldn't come to agreement regarding certain aspects of the budget with some of the members of the Government of National Unity. One of those key things was around VAT. There were rumors that VAT will go up, and it seems the ANC was against that. So that's one of the things that he highlighted as the reasons for the postponement.
Okay, so otherwise, what are currencies looking like today? How's the Lilangeni performing against the US dollar?
Right, so today we opened at against the dollar at around 18.3537 in the morning. Obviously, markets were volatile in anticipation of the budget speech, and after the news broke that the budget speech was postponed, we then saw the rand shoot up to over 18.5. But as you can see, against the dollar, it's 17.4350, the euro 19.2275, and the pound at 23.225. With the pound, we received data this morning that inflation in the UK increased to about 3%. The market was pricing in an increase to 2.8%. So that gave the pound a bit of strength as well. Yeah.
All right. So let's just move on to the US. Take us through on the minutes of the Fed. We know that they held their last minute, their last meeting last month. What are the minutes of the Fed?
All right, so later today, the market is waiting to see minutes from the Fed's January meeting for clues on the interest rate trajectory of the US, for the tone of the minutes to see if they will be aggressive on, cutting rates or if they are holding off on that. So investors are just waiting to see what the tone of the minutes is going to be, or what the content of those minutes are going to be, to then make decisions on their investments, where to put their money, and related issues. So in terms of, I'll make an example, say those minutes are come out and the Fed is a bit dovish in its stance, then we expect the dollar to sort of gain a bit of, to sort of lose a bit of strength. But if they're aggressive, then we would expect that it would lose a bit of ground.
Okay.
Yeah.
Yeah. So moving on to commodities, gold is doing quite well. Last I checked, why is that happening?
Gold is doing well. I think we are $3-4 away from the record high of 2,974. We are currently at 2,944.25 per ounce. And then Brent crude is at 77.69 per barrel, up as well. With gold, it's more on the backdrop of the world economy. There's quite a lot of geopolitical tensions. There's quite a lot of international trade tensions with the US president being aggressive in his stance on introducing tariffs into the market or into imports into the US. So with all of that uncertainty, investors then look for more safer options to put their money in. So gold happens to be a safe haven investment instrument for investors to look at. But it is definitely up, and we are not sure if this trend will continue, but it's yet to be seen.
Okay, so lastly, let's take a look at equities today. How are they reacting to markets today?
Right, so I'll start with the S&P 500. So in the US, the equities are, I think, are performing quite well. Actually, they are. They are reacting. Investors are sort of a bit aggressive in their sentiments in terms of risk, and they are, as you can see, up 0.24%. Excuse me, the S&P 500 trading at $6,129.58 dollars. But as well, caution today with the minutes coming out. Investors want to see what those minutes are going to look like for further decisions. The FTSE is down 0.01%, slightly. Trading at 8,766.73 pounds. One of those key drivers is the inflation number that came out this morning to say that inflation has increased more than we had anticipated. So that then has given the pound a bit of strength, and then equities will then tend to then suffer a bit.
All right, thank you, Taba, for that analysis. That was Toba from Nedbank Eswatini, just giving us an insight on today's financial markets. We go for an ad break and we wrap up the show after the break. Stay with us. All right, it's 2 minutes before 3 o'clock. We've come to the end of our episode of Nedbank Business Watch. Thank you for tuning in. If you've just joined us, worry not. You'll find this episode on our YouTube page, Eswatini TV. We'll see you next week again for Nedbank Business Watch at exactly 2 p.m. Enjoy the rest of your day.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.
sky. In the blue sky. Behind a cloud that's